The opinions expressed on two-way traffic are those of Darren Coleman and are for general information purposes only. It does not constitute any legally binding engagement between the podcasters and anyone else. Always check with your advisors to obtain your own tax or investment advice. Welcome to Two-Way Traffic with Darren Coleman of Portage Cross-Border Wealth Management. In this series, Darren aims to guide you through the complexities, complications, implications, and most importantly, the advantages of having money and family on both sides of the border. In this episode, it's a belated Happy New Year for 2025 with tax lawyer Trevor Perry and tax expert Kim Moody joining Darren. You're advised to fasten your seatbelts.
Hi, and welcome back to another edition of Two-Way Traffic, the podcast. And listeners, you're in for a heck of a conversation today. It's New Year's Eve, 2024, and I'm joined today by two of our favorite guests from the past year, Kim Moody of Moody's Private Client in Calgary, Alberta, and Trevor Perry, who is fighting Leviathan consistently in Ancaster, Ontario, two of Canada's most prolific tax fighters. I've had conversations individually with you this past year. I know you guys are friends, so I've decided to do something that might be very damaging to my career of having both of you on together to discuss a little bit of where are we right now in terms of tax policy, what should Canadian investors be thinking about, also as we have a new government going into the United States. And a little warning to my compliance and communications people, you're probably going to be drinking straight out of the bottle before this thing is over. So listeners, you're in for, I know these gentlemen well. I think there will probably be some donations to the Liberal Party of Canada happening at the end of this thing. So, or not, we'll see. So gentlemen, welcome to the last episode of 2024. Thanks for taking some time.
Thank you very much. And Kim, you're dressed wonderfully as always. Just for your viewership, we buy from the same tailor.
We do.
Yes.
We do.
Although
what's
I'm trying to dress like 1910, but that's okay.
what's your liner do today?
I just have some paste going on.
I just have basic blue. I knew I was not getting into this sartorial combat with you two gentlemen.
But you've got the U.S. accountant walk through the airport look going.
That's fair.
Yeah, you do.
That's fair.
I get the button down Brooks Brothers shirt. You got the blue blazer. If you have the tan chinos, you're done. There you go.
You got to get some glasses, though.
I just have jeans on. Although I will admit, I do have a blue vest, which is very Manhattan.
There you go.
I do have one of those.
Hey, I got to ask some questions here,
sure,
Darren, before we get going. So, just for compliance, are we like what's the language restrictions? Are we free to go?
So
F-bombs,
well, we are grown ups. So I'm gonna say, like, if you're like, the children should probably not be listening to a tax conversation anyway. So because tax is basically a 4-letter word in Canada. So if they're listening,
I'm asking for Trevor, right? Because I know Trevor's. I'm always very, very classy.
So I think I'll just let you gentlemen do whatever you want. You are grown ups, and this is, I guess we'll put a parental lyric warning on the front of this one.
Although I've started imparting the importance of fighting taxation to my 3 daughters. I've already told them that sharing smacks of socialism. So there you go.
Sharing sucks. Give 2 3-year-olds a toy and then let me know how that goes. So I think that's an interesting point. But gentlemen, why don't we begin with a little bit of kind of where are we right now? We just had the fall economic statement that was not delivered by our finance minister. Kim, I happen to be out in Calgary. We were having a chat in person before the statement, and you asked me directly, hey, what do you think the deficit's going to come in at? Do you think it'll be more or less? And I said, it'll be over 60 billion. And you said, no way. Well, yeah, way. That's exactly what happened. It was recorded as, let's say 62 billion, although I feel like it's when a contractor gives you a quote, you better budget for some more cash because it's probably going to be more. But they came in at more than 50% higher than the fiscal guardrail that they set for themselves. So this is an astonishing amount of capital that they've spent. And not even remotely close to where they said they were going to be. And even 40 billion was a big number. So now that it's 60, and there's really no one to stand there and take accountability for it. So we had the finance minister resign just hours before she delivered that statement. So that was astonishing. So I want to focus on where does that leave taxpayers right now? Because there were a number of elements or items this year that we kind of, do we abide by them? Do we not? And I'll focus on the capital gains inclusion rate change as probably the most significant one that we had the change announced for June. Many people may have taken action. And where are we now? Is that going to go through? Not going to go through? What should investors be doing? What should taxpayers be doing with the state of change that we have in Ottawa?
I can start off on that one, and Trevor can, jump in anytime he wants here. You're right. It was good to see in Calgary, and I had in my head that the budget deficit would be somewhere in the 50 to 55 billion. I think that's the number I said to you. And when you said 60, I just thought, oh, come on. But then as I read the public accounts that were released the next day, I started releasing it. What a pile of garbage, especially the management report, which is, I forgot how biased those things are, but you can just see some of the accounting games that are played. And me as an accountant, I understand that stuff generally well. I'm more of a lawyer wannabe, as Trevor knows, given the fact that when you practice tax, you're practicing law without a license if you're an accountant like I am. But having said all that, to your question on capital gains, where are we today? Well, this is one of the, I wouldn't say the only times in my career, but one of the certainly most unusual times in my career where we've had some proposed tax legislation that looks like it's not going to get through. And Trevor and I have been around a long time, and we've seen lots of tax legislation not get through, but a lot of it's very technical, and it's ultimately reintroduced by a government because of its non-controversial nature. And Trevor, I don't know if you remember the non-resident trust stuff, that was originated in 1999, and it took the better part of 14 years to get, to finally get in place. Now, though, the average Canadian has no clue about that because it's non-controversial, but this one is broad-based. It's high profile. It's controversial. It's political. I can't think of another, tax piece of proposed legislation that looks like, if I was a betting man, I'd say probably about 98% certainty that it's not going to go through.
Yeah.
And I've written about that in my Financial Post articles. So, Trevor, do you know of any other, broad-based piece of legislation? I can't think of any.
No, that didn't go through. I mean, there was a lot of tumult when income trusts were attacked and all that kind of stuff. But to see, the panic that was engineered this year to create some kind of revenue event because of forced selling, and it's going to die because the little prince is going to prorogue Parliament. I mean, no, I've never seen anything like this before, and it's just part and parcel of, and I think you've written about this extensively, Kim, the worst, in the history of this country, the worst tax policy from day one going on, and it gets worse and worse as they dig themselves in further.
And we'll go over some of the greatest hits on that vein a little bit later in the podcast. So, Kim, you wrote an article about this in the Financial Post. Actually, you kind of wrote two, one just before Christopher Freeland resigned and then one right after that. And it's really a quandary for investors and taxpayers because the general rule has been, if I'm correct, that even though the legislation may not be enacted, one has to act as if it was going to pass, right? But as you guys have both said, it's very likely this will not pass. But that's a political conversation. From an administrative and a tax compliance, should people, as they go into the tax year, should they be assuming that the new capital gains inclusion rate applies and act accordingly? Or should they act as if, no, a betting man says it's not going to happen, so I should just keep the old rates? What should you do?
Yeah, I'll pause on that for 2 seconds, just because something popped into my head just to correct myself. I think that there was a broad-based proposal in 2000, I want to say 6, Trevor, where I think the Conservatives had proposed some sort of middle tax bracket reduction, if I recall correctly, and then that died, and they never reintroduced it. So that's the only one I can think of. But anyhow, to your question, the CRA has a long-standing policy of encouraging taxpayers to act on proposed legislation. And I think there's a good reason for that. And I support them on that, actually, because like we've said right off the bat, I would say 98%, if not higher, of proposed tax legislation gets passed, even with retroactive applicability, which is very, very common in tax law. And given that I'm not a lawyer, I can't comment on other areas of law, but I think it is applicable as well. And so that policy has, like I said, been decades, and pretty non-controversial. This one, I think, is a little bit controversial for some recent statements that are attributed to the CRA that saying that, hey, listen, they're going to continue to administer the capital gains stuff on the basis that it's law, even if an election is called. And that's the part that kind of pissed me off.
Mm-hmm.
And I wrote about it because, listen, you have this broad-based policy. I get it, but it's administrative law. In other words, it's not, you're administering proposed law. This is not effective law. And so you need, by definition, to be flexible with this approach. And in this case, read the room, for frick's sakes. Like, this stuff is not going to get passed
Right.
if an election is called. And therefore, you're going to continue to administer it. Well, I can tell you, in my client base, I'm giving the exact opposite because advice, which is, hey, listen, I think 98% chance this thing is not going through. So if you want to amend your tax returns for the 2/3 inclusion rate, you go right ahead. But you're going to do it without my blessing because I think it's wrong. And you're going to fight to get that money back. It'll take a long time. So that's my approach.
Well, that's a good point, because if someone does follow the process and whatever the new tax forms are going to say and pays that higher inclusion rate amount, and then they do change the rules back to the original rules, how easy is it to fight to get your money back? Is that pretty standard? Like, no, don't worry, they'll refund it within 5 business days? Or is it a big argument?
No, it's not usually a fight per se, but, although there's always exceptions to that. But it's a matter of timing. You know, when can you amend your tax return? Number one, have you filed your tax return? If so, then do you have the ability to amend it, which in most cases you do? And then how long is it going to take for them to process it? Those are usually the pillars. And it's that last one that takes a long time.
And it's part and parcel of a tax administration system that needs a complete overhaul.
Yeah,
I mean, Canadians, I pounded the table on changing the evidential burden to make the government have to prove its case, given that they know everything that you're doing already.
Right.
At that time, there's come a basic respect for the taxpayer, which is something that we don't have. I mean, I remember telling our last prime minister, who was fantastic, that there were more auditors in Canada than Canada has infantry. That's the nature of the beast right now.
And you know that's increased by a lot, as you know, Trevor, right?
Mm-hmm, mm-hmm.
I think what was the numbers I've written about this? I think it's 29,000 CRA employees when Little Prince, using your language, took office. Today I think it's almost 60,000, if I'm not mistaken. Not quite. I think it's am I right, on mid-50s, something like that.
Yeah, we have about 12,000 infantry, of which we cannot deploy them all at the same time.
I don't think we can arm them properly, by the way.
No, we don't.
That's just nonsensical, in my view.
Well, maybe they could buy their own guns. Oh, no, they cannot allowed to do that either. So never mind.
Not allowed.
Good thing we're pretty proficient with hockey sticks. So at least we've got that going for us.
Yeah.
We've got that going for us.
Wait, can I digress for a
Sure.
second? Who read the ridiculous piece put out by Mark Carney in the Globe and Mail yesterday? Trevor, did you see that? Or Darren?
No, I didn't. I don't.
I've met Mr. Carney, and I don't really want to read more, but go ahead.
Unbelievable. Like, how he gets airtime is just, I mean, yes, he's a smart guy. He's got lots of credential, blah, blah, blah. But he put out what Canada needs for 2025. It's got to be one of the most ridiculous pieces I've ever read. And frankly, you know, I think I'm a stupider person for reading it. Like, my IQ level's dropped.
Hey, he could be the next finance minister or prime minister. I'm like, they're trying to lure Mr. Carney into federal politics.
I think he's Michael Ignatieff 2.0. So.
Oh, I think so too.
I think you might be right.
I mean, if you want to talk about the future of the Liberal Party, I don't think it's Mark Carney. If there is, I mean, I'm certainly an advocate for a serious forensic audit of most of the Liberal Party, the PMO, and several members of caucus. But if there's anything left over after the next election, I think the leader's coming from the outside. It's not going to be a member of caucus, and it's not going to be the poster child for globalized banking.
I think you're right.
Well, hang on. Let's before we get into who we think might be in, let's go back over that greatest hits of, you know, fantastic and outstanding tax policy that we've seen over the last year. We've had a few. Kim, you actually wrote about that in the Financial Post today a little bit. We've had the tax flipping tax. We've had the changes to AMT. We've had the underused housing tax. We just had them move the date of which you can make a charitable contribution because we had the postal strike. Do you want to tackle any of those individually? Any favorites of brilliant tax policy that you've seen there?
Well, real quick, I mean, as you know, and Trevor knows, I'm certainly no fan of the capital gains one, which I had ranked number one in the article as the worst policy. But number two is something that, even when I lectured to 400 accountants here recently, and it's surprising to me that none of them, well, I wouldn't say none, but hardly any of them knew about number two, which is the prohibition of deductions on certain short-term rental owners. So if you happen to be an evil owner and operator of a Airbnb that operates in a jurisdiction that prohibits that, you're denied all your expense deductions because, of course, those people are materially contributing, to Canada's housing challenges.
They are.
First of all, that's bullshit. First of all, that's bullshit. But second of all, a complete prohibition of deductions? Like, are you kidding me? So the example I, have written about a lot over the last year is, let's pretend that Trevor is a cocaine dealer. He's out selling snow, and
he looks like the type, by the way. He looks right out of the videos. He looks stereotypical. Yeah.
And so he's
here's my collection.
Oh, there you go. Holy Jesus, that's quite the weapon. But
it's a letter opener.
So he's but me, I'm just a lowly Airbnb operator. So Trevor makes 10 grand selling snow, but he's got quite the, he's got a bunch of people running around for him. He's got burner cell phones. He's got cost of his inventory, et cetera, et cetera. So he makes net $2,000, and he comes to me and says, "Hey, Kim, I know I'm doing something illegal here, criminally. I'm selling drugs, but I don't want to be a criminal twice. I want to make sure I file my tax returns because
that's how they got Al Capone, right? So we got to learn from that.
Yeah, exactly. And so I don't want to be a tax evader. So can you file my tax returns for me?" So goes ahead. I file the tax returns. Do you think I'm claiming his deductions? His $8,000 of deductions? Sure I am. And there's nothing in the Income Tax Act that prohibits that. But now I go ahead and I file my tax returns for my evil Airbnb operation that I'm operating illegally in a jurisdiction because I need to pay some bills. And I have the same $8,000 of expenses. Nope.
Not allowed.
I can't deduct those, so I'm paying tax on 10. Now you tell me, from a public policy perspective, what that says to the average Canadian if they understood it. That tells me that the drug dealer, in this fictional world, Trevor, is better off and should be treated more better from a tax perspective than me, the lowly Airbnb. That's ridiculous policy.
Yeah.
It's dangerous policy, and it's something that needs to go immediately because it's just it really drives me crazy when I continue to think about it. It's unbelievable. I don't know if you have any comments on that, Trevor, but
for me, as a lawyer and as a political junkie, I think it goes the root cause, and eventually this is going to have to be faced in this country, is that our 1982 constitutional exercise needs to be reopened. That document, the charter, was foisted upon us, and there was no popular buy-in. It's also, it's basically a doormat with this government. But until we enshrine property rights in the Constitution, and I believe as a fundamental conservative that we do have property rights, we always have. The fact that we didn't write them down does not make a difference, but the courts won't enforce that yet. We have to, and hopefully Mr. Polyev steps in and says, this is ridiculous. Canadians have an inherent natural right to private property and not to be deprived of without due process and with fair and equitable compensation. That has to happen, and that will permeate throughout tax. The country is broken at the core, not just because we have the Prince Dauphin and a corrupt PMO. We have a flawed system that has been exacerbated by economic and other issues.
And just to put some gravy on the fries, why don't we now pivot to talk about the changes that we might see coming from our cousins in the United States? They've got a new president coming in who's been quite prolific in just.
Darren, before you do, I was going to throw out my worst.
Yes,
not so much
please.
Policy, tax policy is horrible, but in terms of tax practice, having done lots of work with professional athletes, CRA running at baseball players and hockey.
Oh yes, the Tavares situation, and we've had some baseball players roped into. Yeah.
I mean, if Tavares loses that case, you're going to start seeing Canadian teams fold up and move again. It's just absolutely stupid. And again, it goes to the whole issue of why are we taxing people into oblivion at $245,000 in the North?
Yeah, we did a podcast episode with Kevin Nightingale and Shlomi Levy talking about they don't represent Mr. Tavares, so it was safe for them to comment on it, I think, about that one. So listeners can go back and hear that podcast to become familiar with that case. We have had a bit of movement on that. We've had some Toronto Blue Jays baseball players who had similar predicaments that look like they've been resolved positively for the players, but those are not exactly the same situation as Mr. Tavares. So we'll have to see what unfolds here. And as a big sports fan yourself, I know that one's pretty close to your heart.
Well, as you know, the Stanley Cup will come back to Canada one day. It's going down St. Catherine Street. So Leaf fans may once again put their long hairs away.
What didn't you have a joke about that Maple Leaf fans have not seen the Stanley Cup in color?
Yeah, I was saying, because when I used to run across the country trying to make actuarial services exciting, I'd find the Leaf fan, and they're everywhere. And I would say, yeah, in Montreal we've seen the Stanley Cup in color, and then there's silence.
Well, we can visit it at the Hockey Hall of Fame is in Toronto. That's about as close as Toronto gets to the darn thing.
So is most of the Canadian economy because of René Lévesque. We're going to get a statue at Bay and King saying "Merci René" because that's the only reason Toronto is what it is.
Oh, here we go.
The one thing I'll dispute you with, Trevor, is it'll be the Flames before the Habs.
1989 never happened. It's like Bobby Ewing coming out of the shower. So,
so now that we've got into hockey, let me lure back our American listeners for a minute there. So let's pivot into what's happening with our American cousins. They are going to go into, I think, a very interesting 2025. They've got a new president coming in a little over a week, who's already been a little noisy around what he thinks of how to change the world a little bit. So the difference, I think, is going to be very significant between how the U.S. is going to adopt tax policy. And it's a little concerning, I think, for many people that Canada doesn't apparently seem to have, a functioning government at the moment in some ways. So what do you guys think that Mr. Trump might do just in his first year in terms of tax policy? What should investors maybe be getting ready for? Trevor, why don't you go first? You're a big Trump fan.
Well, I think you're going to see them. Make the tax changes he brought in his first term permanent. I think you're going to get that lower corporate tax rate, which is going to cause great tumult in this country and in other countries, but particularly Canada, where we've been increasing tax at almost by every measure. So I think there's going to be pressure here. To have some kind of sensible corporate tax rate. The estate tax change, there won't be any changes to estate taxation in the U.S. for the foreseeable future. So there will be, again, more reasons for, as Ross Perot called it, that great sucking sound of Canadian capital, both real and human, to leave the country.
Let me test that one for a second, because I know this comes up a fair bit, and sometimes people push back and say, well, just in theory people can do it, but are they actually doing it? So, gentlemen, have you actually seen evidence in your own practices of Canadians saying, I'm done, I'm out of here, and they're actually making the steps, they're making the move to leave to a lower tax jurisdiction? Because I just want to test this. People say it's possible, but how many people are really doing it? Are you actually seeing it?
Yeah, 1,000%. And I've written about this a lot. I've spoken about it publicly. I've spoken at a conference on this, where actually on one particular conference, I spoke about this, and a lefty academic was pro capital gains changes. No. And, of course, there's a lefty academic in it. And so I recited the statistics that I'll tell you right now, but his rebuttal was, I don't believe you.
Right.
And that's all they say, right? I don't believe you. Show me the statistics. Well, here's the statistics coming out of my office in Calgary. And we're not a big office, right? We punch above our weight, but we're about 85 people. We act for high net worth, ultra high net worth private companies and individuals. in the first 23 years of my career, I've been practicing for roughly 31 years now. In the first roughly 23 years of my career, I did maybe a dozen departure tax files. People leaving Canada, and what are the implications of leaving Canada? And as Trevor knows, you could drive trucks through the legislation before, right? It was really easy to leave Canada without incurring departure tax. That all changed. I want to say late 90s. Am I right, Trevor? Something like that.
Yeah.
And they made it a lot more difficult. And so, in the last 9 years, coincidentally, when the Little Prince came to power and immediately increased, introduced a new high personal tax rate, that was a flurry of activity. And then, of course, fast forward to the attack on small businesses in 2017, that caused a whole bunch of angst. COVID caused a whole bunch of angst with out of control spending and, where's our anchor, blah, blah, blah. And then continued attacks. And then the capital gain stuff was just kind of over the top. So all to say, in the last, especially 5 years, the number of files that I've worked on in the, departure tax, you want to take a guess, Darren? Remember, dozen in my first career.
Yeah, I was going to say, well, you're over 100.
Yeah, okay. Trevor?
600.
You are bang on.
Wow.
It's over 600. It's over 600. Now, to be fair, not all of those 600 have actually closed the deal. I would say probably a little over half have closed the deal. The others you're just waiting in the wings. Now, do you want to know the wealth, which I haven't tracked it accurately, but the wealth attached to those 300 files?
It's more than $50. I'm just going to take a stab
It's
at
more
that.
than $50. Let's just say it's high billions.
Yeah, that's gone.
And
it's
it's
not going to
gone.
come back. It's not going to come back.
Nope.
Not coming back.
No, because once people have departed, they paid the exit tax. They're not coming back and paying this all again.
Darren,
Reversing it.
We did our annual drive through the Midwest because my wife's family is from Wisconsin and Minnesota. And in addition to seeing probably 7,000 Trump signs and 2 Harris signs, I can attest to you that the American standard of living is demonstrably superior than the Canadian at the middle class and lower middle class level. It is tangible. It is real. All you need to do is go and see it. As a father of young children, my family's been in Canada for 400 years. My French is brutal, but we've been here for a long time. So it pulls at my heartstrings, but I am very much considering, I'm probably going to write the Florida bar some point this year. Whether I go or not, I don't know, because I think Pierre can actually, if Canadian, it's not just the leader, the Canadian electorate, the citizenry has to wake up and say, you know what, it's our fault too. We put the SOB in power.
Well, people get the government they deserve, right?
You get it. Exactly. So there's a ton of work to do. And this cradle to grave government has got to end. As I pound the table, Leviathan must be stopped.
Yeah.
But the dichotomy, the paradox between Canada and the United States right now has never been more stark in my opinion.
That's a nice segue to conclude on my statistics.
Yeah.
Any guesses where all that wealth is going?
I'm going to guess Texas and Florida are the 2 primary recipients.
Well, I mean, you hit the United States, right? So
Yeah.
I would say without a doubt, 95% go to the United States, which, that tends to shock some champagne socialists. What? Why are they going there? The political
they don't have health
situation's-
care and guns and things, right?
Yeah, our healthcare is superior. No, it's not.
No, it's not.
It's
Well, I
actually
think
ridiculous.
COVID demonstrated to many people that it maybe isn't as great as we hope it is sometimes. So
Yeah,
that's an
but-
issue.
Canadian health.
So it's all going to the States.
I mean, I remember in second year undergraduate in Convocation Hall, it was Introduction to International Relations, and Professor Janice Stein asked us, "What is Canada, and what are Canadians?" And I said, this is the 80s. The Canadians are an apathetic lot who believe that the country is the sum total of its social programs. Was I wrong? No. Canada is broken. And people identify themselves, and the entire mantra from the Liberal Party is, we've addicted you to government. Why would you ever want to vote for Mr. Poilievre? Because you have to give up your addiction. They're just handing crack out. It's ridiculous.
Yeah.
The country is inexorably broken. We have to go back to first fundamentals.
So let's play a game here because we've had, I think it's hilarious, by the way Mr. Trump has been trolling Mr. Trudeau with the 51st state
How
comment.
dare
calling
you
him the
say
governor.
that, Darren?
I just think
How
it's,
dare
I
you
love
say that?
comedy. I will appreciate comedy, right? I'm a fan of comedy. So I think it's actually quite funny. But let's toy with this idea, because Diane Francis wrote an interesting piece that talked about, Canada becoming the 51st state. And obviously she balked at that because politically it just wouldn't happen. And the wealth of Canada is too gigantic to just say we're absorbed as a state. But she posited this idea of a more positive economic union between Canada and the US to kind of erase the border from an economic perspective, right? To allow a greater free flow of capital, employment, and everything else, just like the EU, right? You can live in Germany, work in France, and everything else. Now, that would be devastating to my business and Kim's and Trevor's to some extent, because we help people with that maneuver of moving capital and people across the border. And that complexity is actually great for us in resolving it for people. But would that be something that you guys see as a potential reality in the next few years of a greater degree of union between Canada and the US from an economic perspective, not politically, but to make that movement of capital and human capital back and forth across the border a little more seamless?
I'll jump in. Without a doubt, I think that would be better. I mean, when you have, what are we now? The third largest trading partner in the U.S. I mean, for years we were proudly number one, but I think we're now number three. Am I right on that?
I'm not sure.
But
I thought we were
uh,
one, but
no, I think we're down. But in any event, I think you framed it nicely. I mean, like Trevor, I have roots in Canada going back probably not 400 years, but a lot of years. And I'm a proud Canadian. I would never support being the 51st state. Like you, I love comedy. And I do think this trolling is,
It's
it's
pretty
certainly
funny.
pissed a lot of people. I think it's kind of
Well,
humorous,
I
but
think it worked because it hit a nerve.
well, he's a lot brighter and his people around him are a lot brighter than they give him credit for, especially in the mainstream media, so-called mainstream media. So, but in terms of an economic union, tighter ties, kind of a seamless border, yes, as long as we can deal with some of the soft spots, and some of the soft spots are things that Trump seems to have a real hate on for. I think the fentanyl crisis is not even close to the top of his list. I think it's anything to do with money, which is where's the disproportionate trade going on with the United States and Canada, and how can they improve that? I think if we can deal with those soft spots and at the same time deal with the, some of the stuff that is more humanitarian in nature, like the fentanyl stuff, then great. I'd be all for that. So that's my 2 cents.
yeah, I'm all for as much economic integration, both interprovincially and across and with the Americans as possible. Uh, our future is tied to the United States.
No
Uh,
question.
there's no third option like Pierre Trudeau talked about. And I'm not a big fan of selling our natural resources to the People's Republic of China. We can do
No.
business with them as long as they will adhere to contract and things and rule of law, and we can do great business with them. But our future has always been uh, tied to the United States, and we better realize that. We can all be Canadians, and we can, do all the things we need. Now, I'm not so certain about do we not become a state. I think it's unlikely, but if Mr. Legault loses the election and the Parti Québécois comes in, and there's a referendum and they win, which is quite possible, then what happens? I mean,
Mm.
do Alberta and Saskatchewan say enough's enough? We have more culturally in line with Montana and Wyoming and places like that. And do we end the federation? Again, it goes back to my comment about the Constitution. Canada's broken structurally, and it needs to bite that down on and deal with it, because it's not going to get better until we fix the rules.
Interesting food for thought for 2025. So, gentlemen, I'm going to wrap it up there. We've been about half an hour together. I want to thank you for your time and thank the listeners for joining in. I think there might be a few other topics that maybe we pick this up in the new year as we get a little more clarity on the political situation in Canada and as the U.S. Brings their new president into power. Because, Trevor, I think what you've just posited is a very interesting idea maybe scary one, but something that I think we have to have on our radar for 2025 as investors and as taxpayers. Okay, so gentlemen, with that, thank you very much. I wish you a happy, safe, and comfortable New Year's Eve and a wonderful launch to 2025. Continued success to both of you, and I look forward to continuing our conversations and our work together. So thank you very much for your time, and I wish you a great day.
Thank you very much. Cheers.
Cheers.
This has been Two-Way Traffic with Darren Coleman of Portage Cross-Border Wealth Management. Thanks for watching and listening. If you have any questions or comments or ideas for new episodes, send us an email at twowaypodcast@gmail.com. And you can find the Two-Way Traffic Podcast on Facebook and Twitter. This series is a production of the Acme Podcasting Company.
On behalf of the Two-Way Traffic Podcast and Portage Wealth of Raymond James, thank you for listening to this conversation. This podcast has been prepared by and expressed the opinions of Darren Coleman and his guests and are not necessarily the opinions of Raymond James Ltd. Statistics, data, and other information presented are from sources Raymond James believes to be reliable, but their accuracy cannot be guaranteed. This podcast is for information purposes only and is not construed as an offer or solicitation for the sale or purchase of securities. Investors considering any investment should consult with their investment advisor to ensure that it is suitable for the investor's circumstances and risk tolerance before making any investment decision. Past performance is no guarantee of future results. Information provided in this podcast is general in nature and should not be construed as providing legal, accounting, and/or tax advice. Should viewers have any specific questions or issues in these areas, please consult your legal, tax, and/or accounting advisor. Raymond James Ltd. is a member of the Canadian Investor Protection Fund. Raymond James USA Ltd. is a member of FINRA and SIPC. Raymond James Ltd. and Raymond James USA Ltd. financial advisors may only transact businesses in provinces and/or states where they're registered.